Hey guys, I'm Tim Kotzman here with Tad Smith. Tad, thanks for making the time.
Tim, it's great to be here. Sorry I didn't wear a tie, but if I were going to wear a tie, it would definitely be orange.
Well, you took the words right out of my mouth. We have a
I love
gift
it.
for you.
Look at this.
It's an orange tie.
Now, in truth, I went to Princeton.
Mm-hmm.
We're all about the orange tie. So
Perfect.
I feel very good about the orange tie.
Okay.
This is excellent. Thank you.
My thesis is there's only a handful of people in the world that I've seen wear a Bitcoin orange tie. Michael Saylor.
Yes, check.
Jeff and Ryan, the Quant Bros.
Totally the Quant Bros.
Dan Hillary.
Yep.
And myself.
Yep.
And even if I've missed a few people, you're still going to be, if you choose to wear it, one of the first 10 people on the world stage to wear the Bitcoin orange tie. So there you go.
I'm into the Bitcoin orange tie for sure. This is a nice tie, by the way. It's nice material. Look at you. Thank you for this.
You're welcome. I don't remember if it was an $18 tie or a $6 tie on Amazon, but I'm glad that it's
But you got overnight. You got free shipping.
Free shipping. That's
Did
important.
it come same day? Well, you live up here in the New York metro area.
It's
Everything's
within
free and
1 to
instant.
2 days. Yeah.
That's cool.
Yep.
All right. Thank you for the tie.
Absolutely. Could we start with your...
Hey, this is your rodeo. We're going where you're going.
Could we start with your upbringing, your education, and your professional background?
So, sure. Where do you want? So I was born in North Carolina.
Okay.
So I'm actually technically a Tar Heel, but I don't sound like it because I grew up in Denver. And I went to public high school. I went to Thomas Jefferson Public High School in Denver, Colorado. And that's sort of my upbringing. I'm very much, and by the way, Colorado back then, I'm 59, so it was the 70s in effect. Colorado back then was it was a libertarian state. They had like Governor Dick Lamb. Wasn't he like Governor Gloom or Governor whatever? He was always into euthanasia or something strange, some weird stuff like that. But that was Colorado back then. It was sort of rugged. And I would say the reason it's interesting is because I collected things, coins, stamps, independence, a libertarian strain of thought. All of that was inculcated. When I sort of inculcated myself, I sort of, I grew up in that. And that's really where I came from.
And then can you touch on your professional career? And there's a method to the madness. I just think...
Well, there's certainly a lot of madness.
As we get into...
Method less, madness lots.
Okay, let's go into madness then.
So, yes, I clearly I've gotten around a little bit. So I worked on Wall Street for JP Morgan and Company. I've worked for the Rockefeller Foundation as the assistant to the vice president. In fact, at the time, I was assistant to the vice president for finance administration and also worked on their folk art collection, oddly enough. I'm the former chief of staff of the New York City Taxi and Limousine Commission. Can you believe that? A million years ago. And I have spent 4 years at McKinsey. I've worked for Oliver Wyman and Company in banks. And then I decided to get into the media business. And this was back when there was a media business. This was early media business. And I worked for the entities that own things like Billboard magazine, and then went to a range of others through that. I consulted to the Billboard magazine, and they then gave me a job with a great guy named Strauss Zelnick, who has gone on to be, of course, Take-Two Interactive's chairman. But at the time, it was my first stint in the music business at BMG Entertainment. And that was a wild ride. And then from there, I went to work with a guy named Barry Sternlicht at Starwood Hotels. And then I spent 10 years at a company called Reed Elsevier, which itself has got a sort of eye-rolling name. But it had some really interesting properties: Variety, Publishers Weekly, Interior Design. So the whole notion of business information and trade magazines. And the reason that was important is because this was the dawn of the internet from 2000 on. And you can just imagine, obviously the internet started in 1994, and I was there for it in the music industry in 1996 and 97 and 98. But it really had collapsed in 2000 and took off later. And the reason that was important is because it means I've seen a lot of cycles. And the cycles come and they go. And I'm talking cycles in the sense of what we think about Bitcoin, 4 years. I'm talking about big cycles where Amazon goes to 56 cents and you think it's out of business, or Google goes public at $85, and I have a class at Stern Business School, which I'll come to in just a minute. And one of my final exams is I ask all these kids, are you a buyer or seller of Google at $85? And everybody's a seller. So I did 10 years of that. I then joined Cablevision, the big cable company here, and became president of the media division for that. And then from that, it's controlled by the same family that owns the Knicks and the Rangers. That's the Dolan family. I then became the chief executive of Madison Square Garden, which my kids declared was the coolest job in the entire world. And you can imagine their absolute bafflement and mystification when I, over one weekend, went from being the CEO of that public company to the CEO of Sotheby's. So they traded the Knicks and the Rangers for art. And I became the least cool dad in the entire universe, not to mention the absolute zero of a husband for sure. My wife loved the Rangers and the Knicks. And then spent almost 5 years at Sotheby's, the auction house, and so was immersed in art and jewelry and wine and bourbon and all sorts of really interesting, fun things. I then sold that in a going private transaction and have spent time since rolling up a home care company. And also, along the way, by the way, in 2019, I started investing with a good friend of mine named Dan Tapiero, who needs no introduction for a lot of people who are in alternative asset space, because he launched a fund called 10T Holdings. And my wife and I were early investors in Fund 1. And then also we were co-investors in Fund 2 and Fund 3. We were investors as well. And he said, Tad, you really ought to look at this. At the time, it was interesting because we were looking at, Dan and I met because we were looking at investing in a gold business together. And, Bitcoin was well along by 2019. Of course, I had friends doing it and it was fascinating. But the underlying thesis, the sort of Hayekian thesis was similar in some respects with pronounced differences. So I was already attuned to it. And go back, remember what I said earlier about being in Denver, I was definitely bathed, if you will, in a libertarian philosophy. Mm-hmm. So the idea of hard money was definitely there. And Dan's funds, which by the way are now my funds too, because I'm a partner limited on those funds, but general in the fourth round, which is RoundTable Partners. And I've been with him now for 5 years, and more recently in the last year or so as his colleague and partner in those funds. And I spend most of my time doing that, with the exception of I still love the art world. So I'm chairman of the board of the Fine Art Group, which is the largest art advisory and merchant bank that's based in London. And so I spend a lot of time now with really awesome entrepreneurs that are building companies and wondering how to scale and how to navigate all the stuff going on.
How involved would you say you are in the general partner kind of more active role with Dan's funds as far as just all of that?
Yeah, so let's break it down into pieces. Very active is the short answer.
Okay.
But Dan uses me in a lot of different ways. One is advising him on selected aspects of investing, lots of them. Dan doesn't need my opinion on macro, but he might want my opinion, in fact, often does, on management teams or on business models or on moats or on competitive strategy or whatever the case might be. And a lot of places he tends to use me is on boards. How do we make sure that the board is moving in the right direction? How do we make sure management has the support that it needs? Things like that. And so, because I've been on so many boards and worked for so many boards, I've got a lot of pattern recognition. Plus, it's fun. Boards are like three-dimensional chess sometimes.
What's been your best experience and kind of like worst experience when it comes to board work or just anything that you want to cover in that regard?
Yeah. So the best experience with board work, I have to say the board at Sotheby's, and the chairman of the board was Domenico De Sole, who was famous from Gucci and also co-founder of Tom Ford. And also interestingly, had Dan Loeb on the board too, by the way. And he is, a lot of people think, Tad, what's it like to have Dan on the board? Dan is one of the most remarkable directors that there is. He's just, you absolutely want him on your board. He's amazing that way. So I would say the board that sold Sotheby's, which from being a public company to a private investor, was probably the best board experience and the highest performing board I've ever been on. I'm not saying at each moment the board was performing highly, but in the end, the overall performance of the board was sensational. And then I've also been on boards where it is just dysfunctional and it doesn't move forward, and the performance of whatever the organization happens to be, nonprofit or for-profit, isn't delivering the goods, isn't moving forward. And the board often is because it's a role question, which is a chair of the board really has to be a parliamentarian. They have to be able to bring out all the different views in a group. And the person can have a strong point of view. I think that's a good thing to have a strong point of view, but it's not a good thing to be both the parliamentarian and the first person talking on a strong point of view. In fact, it's often a flawed strategy. What you really want to do is let everybody else go first and crucially make sure everybody contributes. And when you have good hygiene on boards, you generally get a better result. Now, most boards have some good people. Very few boards have no good people, and some boards have great people. But even boards with great people, if you have bad hygiene, you get bad results.
Can you define hygiene in that context?
Hygiene, yeah. Everybody contributes. Norms are maintained. You solicit everyone's opinion. You have constructive dialogue about things on which you disagree. By the way, I guarantee you when you put 10 people in a room, they're not all going to agree about complicated issues. So you don't have just two people who do all the talk, and then everyone moves on and nobody actually talks about it. You have a board that asks probing, thoughtful, constructive questions. You get your hands dirty, and you really do it. On the other hand, you don't get in your mind that you're substitute for management. You're not management. You're a board. And your questions are intended. The intent is so important. The intent is not to undermine or embarrass or diminish or impeach anybody. The intent is to get to a good solution and support the management. And often if the management just either can't take the support or isn't doing then you have to make a governance decision or a change. But that's really what hygiene is about. How do you run a really effective board? And that's a lot of people don't have that.
Can you tell us a little bit about the beginning of your Bitcoin journey, how you first heard about it, or how that journey started?
Well, the beginning would have been a guy I used to work with was telling me about Bitcoin, and I thought it was novel and interesting. But I think about 10 or 15 minutes ago, I told you I started my career at JP Morgan. So I'm not a boomer, but I missed it by a whisker. I'm the oldest Gen X you'll ever meet. Literally the last one. I mean, the first one, technically. And so what that means is I understood the TradFi notion of money and was, at the time, unclear on resolving how a piece of code could be money or could have value. To me, that just didn't compute. And by the way, this is a guy who is perfectly happy to sell you a canvas that looks just like another canvas, but one costs $20 million and the other one costs 20 cents. I can sell you a $20 million painting, but I can't tell you why a piece of code is money? That's an interesting paradox. So that was the journey. And so I dove deep and began to question what is money exactly? I thought it was currency. I was wrong. And then what creates value? Why do things have value? What is it about us that ascribes value to things? And then I literally went down a rabbit hole. And it's actually not too far off what Michael Saylor or some of these people talk about, do 100 to 1,000 hours on it, and you really dive into podcasts and dive into the books and ask yourself, go on an intellectual journey about what does all this stuff mean and why is it important? And then there's startling insights that I have now at age 59 that I didn't have at age 57 that came from this journey. You want an example? I didn't realize that if the average year the money printer goes, call it 8 to 10%, even in the Western countries, even in the OECD nations. And the average return on the S&P 500 is, call it 9-ish%, including dividends, maybe 9.7, maybe a little less. Mm-hmm. That it means that all of the work of the S&P 500, all of the value created there is actually the money printer. That to me was startling. I mean, to think about that, the fundamental notion that in a closed system or even an open system, when you're printing money at the rate of 8 to 10% a year, everything is losing value, and the things that appear to be gaining value are not gaining value. They're just keeping you even. So you can put all your money in the S&P 500 and you're not gaining any relative wealth at all. That's a startling insight. I mean, when you really think about the entire value of the S&P 500, on average over a long period of time, not even a long period of time, is equivalent to the money printer. That's, to me, a shock. And it was a shock that said, oh my goodness, how do you think about creating wealth that is relatively greater in this economy? And you have to look hard. The other thing you can imagine is I could tell you about Sharpe ratios and diversification. I could tell you all these different things. And, you know, it's interesting. You can take a concept like diversification of risk, and at a top level, it can be a very powerful and useful tool. But if you are so focused on the mechanistic aspect of that, you can step back and miss the forest, which is in a highly diversified portfolio, it's unbelievably hard to pick up relative amounts of wealth. It is. Diversifying your portfolio, however you do it, is by and large going to reduce your incremental gain in wealth, irrespective of the Sharpe ratio. It's concentration of capital in specific bets that outperform the money printer, where you actually create wealth. That was a shock to me. I just didn't get it. I didn't understand it. Even though I taught finance for 20 plus years, I'm still a professor at NYU Stern, at Stern Business School. I've taught strategy and finance for technology, media, and entertainment companies. I'm on a 2-year hiatus, but I'll be presumably going back in the spring. For 25 years, I have almost, actually more than 1,000 former students. And I still didn't get it until I'm age 58. That's the Bitcoin journey.
When you came to that realization, how did you apply that to your portfolio and your allocation at that point to Bitcoin, presuming that MicroStrategy had not yet adopted their current strategy at that point?
Well, the first thing I did is, by the way, Bitcoin to me is, it's probably the strongest, most reliable horse in the race. It isn't necessarily the fastest horse, which we'll come to in a minute. Mm-hmm. But that one's going to get you across the line, and it's going to beat the money printer.
Okay.
So that's good. Mm-hmm. But it's not the only horse there. And so at the time, I realized very quickly that some things like mega cap tech beat the money printer. The Qs, particularly the big, the NASDAQ 100, beats the money printer on average. And by the way, if you trim it down to the ones that look like those kinds of assets, they'll beat the money printer. Surprise, surprise, coastal real estate in certain really nice places, and places like the Hamptons, Aspen, Palm Beach, Montecito, nice residential real estate, particularly when you have a little bit of a mortgage against it, that beats the money printer. Mm-hmm. And if you do a big mortgage against it, then you can go to places like Westchester or Greenwich or some of these other places, and that'll beat the money printer. Fine art beats the money printer, but not the average fine art. I'm talking the art that Sotheby sells will beat, and Christie sells. That beats the money printer. Mm-hmm. And then very, very unusual, extraordinarily rare collectibles will beat the money printer. Famous cars, unbelievable necklaces, things like that. Very rare objects beat the money printer. Guess what? The list is getting short. Sounds like I've been talking for several minutes about what beats the money printer. We're kind of at the end of the list. Mm-hmm. So what did I do? I go to the things that beat the money printer and got out of the things that didn't.
Do you care to go into any of those allocation thoughts between those assets?
I live in Florida on the coast, live in Palm Beach. I have art. I actually have Bitcoin. I have tech stocks. Obviously, I'm in Dan Tapiero's funds, so I'm deep into those kinds of asset investments, which I love. I have stocks that I think beat the money printer, MicroStrategy among them. And what's interesting, I think, Tim, is that I don't have much else. Oh, sorry. Of course, I have fine wines, which also beat the money printer. And I don't have much else. By the way, I used to have a broadly diversified portfolio. I wasn't ever a big fan of bonds because I just said, oh, it's too not my thing. But a broadly diversified portfolio. And I remember I did actually. I have a really great banker that gave me a recommendation to get into muni bonds immediately before the COVID outbreak. You can imagine that was a big hot mess. So that was my only foray into bonds, and it was enough of a mess for me not to go back into them if I ever even wanted to. I mean, I occasionally have T-bills on short-term stuff, but nothing interesting, nothing like that. It's definitely stuff that beats the money printer. And all roads on that really lead to Bitcoin, which is in some ways the strongest, purest form of money, in my opinion.
When did you first start paying attention to MicroStrategy? Was it in August of 2020 when they first announced?
Well, it certainly got my attention, but I thought they were nuts.
Yeah. At what point?
Like, well, I'm not buying that.
Take us on the journey from
if I were a short, I'd go short that stuff. I don't know why I would do that.
Yeah.
I thought they were crazy. But I sometime in the summer of not this year but last year, so we're talking 23 summer, I said, this is kind of an interesting stock. I'll put it next to NVIDIA. And NVIDIA was sort of the benchmark for me because in one completely errant episode in my life, we had been invested in NVIDIA for a number of years, and we still had it. But I try to always listen to my wife, and she was kind of hot on two stocks. One was NVIDIA and one was Eli Lilly. And she says, honey, this Lilly stuff, this is good stuff. We should get some more of that. So I went and bought some more Lilly, and that worked out well. And then she says, this NVIDIA thing's kind of interesting. I started watching, I consume CNBC throughout the day. And I'll never forget, Jim Cramer. Jim Cramer goes on, I think it was May of 23, and he says, I really think this NVIDIA thing's going to have a big quarter, blah, blah, blah. And so I called up my banker and I said, why don't you just buy a call option on NVIDIA? Let's have some fun. That was the famous quarter where it soared. So I then rolled that into a bigger position in NVIDIA, and then that did well. So I was looking for things to add to that list of, the NVIDIAs, the Lillys, of course we had the FANGs. And I said, well, why don't we try this MicroStrategy? It's kind of interesting. And I can't remember what exactly it was in the summer of last year that got my attention. It wasn't, I think it was a higher focus on Bitcoin on my part at the time. And so I bought MicroStrategy. And this was, by the way, August and September. And it went up. And then, as you may remember, it crashed. And then it went absolutely straight up parabolic. And I said, wait, what is that? And I started listening to podcasts from Michael Saylor. And the first one I ever heard, by the way, was his famous speech in Argentina last year. And I said, well, this guy, first of all, he sounds like he's got a real focus on this. But what I really like is how he places, set aside, in fact, that speech he didn't even talk about MicroStrategy. What he talked about, he did a little bit of it, his famous chart where it's outperforming the entire universe. There's MicroStrategy's bar, and there are 4,000 other stocks or whatever it is he puts. As many stocks he can put on there, it's outperforming all of those too. Good. But what he really talked about was value and money. And I realized very quickly that MicroStrategy, to me, was an interesting play on Bitcoin that had characteristics that the Bitcoiners, the sort of What do I call myself? The oldest Gen X you'll ever meet. Non-oldest Gen X, not quite boomer, missed boomer by a whisper. People like, which is, I'm not one of those individuals that worries much about putting my ATM card in and having nothing there, because I've lived through 2008. I know what that looks like. And so I'm not as, I love the cold storage business. We're actually investors in Ledger through our funds with Dan. So we like that business a lot. It's just, for me, I'm perfectly comfortable with a publicly traded company that is investing in Bitcoin. I'm fine with it. But I like the leverage aspect of it. And what was fascinating to me about Michael Saylor, in particular in MicroStrategy as an investor in it, was he himself was on a journey and he didn't know where the destination was. And I don't even think until recently, literally in the last 6 weeks, has the strategy in his mind clarified. And maybe it's not 6 weeks, call it 3 or 4 months, but recently, really, really recently. Yeah. And I think he's as much acknowledged it recently that he knew that Bitcoin was a better treasury solution than giving the cash back. And then he certainly got last year or earlier this year on the volatility is vitality thing, and he's not wrong about that. But the notion that he could have an institutional platform that would be the bridge, it's weird to use the word platform and bridge, but work with it, right? That could be the bridge between a multi-$100 trillion bond market in this world, right, which is starved for good returns, and Bitcoin, which promises fantastic returns, was extraordinarily improbable. It's almost as if he just wandered into it. And lo and behold, here we are. So,
how long do you think it'll be before, is there a certain event that may happen, whether it's FASB, whether it's whatever other thing that may happen over the next couple of months, where it's just going to be all over the place, and there's this moment when everyone's like, oh, I need to buy MicroStrategy?
Well, let's look at the analogies. There was a moment where people said, oh, we've got to own NVIDIA. There was a moment where people said, oh, we've got to own Tesla. Oh, by the way, we've got to own Lilly. Lilly is not a FANG stock, but Lilly certainly behaved like one for a lot of the time. And there is invariably moments on these things which are on potential parabolic moves, or their business model materially changes, and then suddenly everybody has an aha moment. In the case of MicroStrategy, it has, for me, and I'm not in any position to give advice, and I'm not giving advice, but what I'll say is I'm only talking about how I think about it. For me, my own personal opinion is that I like the stock, but I am mindful that it is a volatile ride. And if you play with options in the stock, you're in for an even more volatile ride. And the reason that's important is every time the value of MicroStrategy stock materially exceeds the net asset value, particularly with his new at-the-money program, Michael Saylor and the management team there have an incentive to sell your stock. So you got to be ready for that. And interestingly, the other thing that's going on with MicroStrategy, which is very important for people to understand, is above the NAV of 1, nobody really knows or agrees on what the value should be. And you know this because you try to help get people to that place. And in that environment where there's significant disagreement on what the value can or should be, you're going to, and by the way, it's called price discovery. You're going to have, and particularly price discovery in opaque markets. Now, remember, you're talking to the former CEO of Sotheby's. I know a little something about price discovery in opaque markets. What that means is you can pay the moon or go to zero, or not quite zero, but you can go really, really low. And so every time, we can all agree when MicroStrategy is at a NAV of 1, what it's worth, because it's pretty obvious, right? And when it's below 1, you know it's a screaming buy. When it's 2 or 3 or 4, there are lots of reasons you can get yourself intellectually to think why it should be there. And I think for me, I love the Bitcoin yield KPI. I think it's very powerful. But I have to acknowledge that that's a controversial position in terms of value. And if enough people disagree with my point of view, I may be right. It doesn't matter. They're going to sell that thing's going down. So when you have sentiment-based stocks like that, that are in price discovery mode, you got to be signing up for a ride.
How do you interpret the comments on the latest earnings call where Michael just made it very obvious that we are a growth company and here's what could happen when you just look at the comparables of other growth companies and the multiple to NAV that they're trading at? Any takeaways from that?
Well, one takeaway I have is that I thought his earnings call, which I watched in total, actually the live version, not even the recorded version, was one of the most dazzling earnings performances I've ever seen of a public company CEO. It was fundamentally a tutorial on how to understand what they're trying to do, as well as why it has value and what the value should be and how to think about the value. And then he systematically picked off, for me, different kinds of concerns, or FUD, if you will, and dismissed them one by one. And it also conveyed a tremendous amount of energy and forward momentum and commitment and enthusiasm, no question. So I thought all of that was excellent. But what I was trying to say earlier, and I'll say it a little differently this time, is it doesn't matter whether I'm right about the NAV if the market doesn't agree with me. The market will do what it's going to do. And if it decides tomorrow that MicroStrategy is undervalued, it's going to go straight up. And if it decides tomorrow that it's overvalued, it's going the other direction. And when you sign up for anything like that, Bitcoin included, by the way, which has a whole different set of very similar dynamics, but it's not as volatile as MicroStrategy. When you have that, you are definitely in for a volatile ride, and it's not for everyone, that's for sure. But it's clearly for me. It's clearly for my kids, clearly for my wife. We like it. We like the stock.
So your wife's on board with it?
Oh, my wife loves MicroStrategy. My wife actually listens to Michael Saylor podcasts. In fact, she has now banned them at mealtime.
Okay.
That's not working anymore. No.
It sounds reasonable.
It's one thing to ban TV at mealtime, but banning Michael Saylor's podcast at mealtime, that's a new level of nerd that I don't understand,
Yeah. Whew.
So where to go after that?
Well, maybe we'll come back to some of that, but you literally just got back from Hong Kong.
I was in Hong Kong. Yes, I had 2 days in Hong Kong. I was at the Christie's Art Tech Conference. How about that? The former chief executive of Sotheby's gets invited to the Christie's Art Tech Conference. That was, I ought to just retire right now. Stop. I'm done.
Yeah.
I'm done. Yeah. And by the way, it was fantastic.
Tell us about that.
So the topic, which was amazing. I was on a panel with a poet named Sasha Stiles. And Sasha works with computers to create generative AI-based poetry.
Okay.
So you might, what on earth is Tad Smith doing on this panel with Sasha Stiles, the poet? Turns out the topic was human creativity and AI. In other words, why don't you two, you, Sasha Stiles, that knows a lot about it, and you, Tad, who don't appear to know anything at all, talk about this very important topic, and what would you come up with? And so in preparation for this, I did two things. One is I reread the original Kurzweil book on The Singularity is Near from 2004. No, it was 20 years ago. And then immediately bought and read his brand new book, The Singularity is Nearer. Got to hand it to him on the title.
Right.
And found out that it's maybe nearer, but about 40% of the book is exactly the same. Then got on a plane and went to Hong Kong and felt fully prepped. So I was ready.
So tell us about the panel and what that conversation kind of, what
I will, but before I do that, I want to add one other book.
Absolutely.
There's a scientist named Sarah Walker at the University of Arizona that just did a book called Life as No One Knows It. Now, why is that important? Because the theory of the case in all of this, there's a thread in this, is that the way we think about life and consciousness is evolving very rapidly. And what we really should think about, you, Tim, I, Tad, We are the accumulation of billions of years of evolved intelligence. And when you take that position, what you can begin to see is her computer, Sasha Stiles' computer, for her is not a tool. It is an alien species. It is a non-biological intelligence. She is collaborating with a non-biological intelligence to create poetry right now. Think about that. Mm-hmm. And we can debate whether that entity is conscious, but the truth is, and philosophers have known this for actually centuries, I actually can't tell whether you're conscious. I think based on my podcast so far, you're clear I'm not conscious, but you've got a real arguable shot. So you sit back and you say, okay, if you can't tell whether it's conscious, really can't, and you don't really know what consciousness is, except you are, therefore you am, you got to pause and you say, that non-biological intelligence has evolved beyond a tool into another creature that we're creating things for. And my prediction, and it's not a particular news flash, but it probably makes art people's heads explode, is that most art in 10 years will be created by non-biological intelligences.
It makes sense.
It makes sense, but it's unnerving.
Yeah.
I don't know about you, but it's kind of unnerving.
Yeah.
So I had to rethink everything I told my kids. I mean, I have a 25-year-old son here in New York City, and I have a 20-year-old daughter in Texas. And the way their lives are going to be shaped is radically different from the way you and our lives were very different. Mm-hmm. And a lot of it goes back to human creativity and AI. What is it that we are going to do? How are my kids going to spend their lives? And their lives are not going to be short. Their lives are going to be long, God willing. And how are they going to do that in a world where we have non-biological intelligence, which, by the way, today, the computers, AI, robots behind them, but AI for the moment, is as ineffectual and low IQ as it will ever be in our lifetime.
Mm-hmm. Do you care to share what, there was a group of us at a conference out in Santa Monica, and I recall pieces of you saying advice that you give to your kids' friends,
kids.
but no one maybe listens to it, which is,
Yeah, well, it's troubling advice. First thing, the first piece of advice, and this is advice for everybody. I know it sounds really, light, but it's actually really important. Don't die. And it's a really important one because the evolution in life sciences and healthcare is so rapid. Absolute, if you can just hang on, whatever it is you have, if you hang on long enough or you're young enough or you're lucky enough, whatever it is you have you're gonna be over that sort of singular event horizon, and we're gonna figure out a way to keep you alive. But for people with kids like mine or younger, the first thing that's shocking is they have to understand they're gonna live another century. And by the way, it could be longer. And I'm not talking live another century and be in really bad shape for the last 40 years. I'm talking live another century and be in better shape than I am for most of it, the vast majority of it, up until maybe the last few minutes. And by the way, when I say another century, that's 125. I'm making that up because I don't want to sound crazy. Mm-hmm. It's possible it could be 150 or 200 years. Mm-hmm. I mean, we could be talking about Methuselah level age here because the body, if the rapid advancements in it are such that fundamentally they're going to live forever. And if they're going to live forever, and we just talked about there's not a single thing that they're going to be able to do that the robots and AI can't do better.
Right.
That's an interesting conundrum. What does that world look like? So what are we going to do? I'm incredibly optimistic about it. And what does that mean? I think we're going to have a period like the Enlightenment in which human beings are not what we have been for the last 150 years, where all of our education has gone to create in us essentially good citizens and good workers in a large and vibrant, mostly in the West, capitalist-based economy. And I think that's been hugely successful and very positive. But imagine what happens if you're actually pursuing education because you just want to be a better person, or you want to be a better citizen, or you actually want to understand Marcus Aurelius, or you actually really want to learn Latin because you just want to learn Latin, or you want to learn how to code even though you'll never code in your life because the bots will do it faster than you. We're going to actually start learning how to do things and doing things because we want to live flourishing lives. Now, the hard part is we're going to have to find purpose. And on that, isn't it interesting that the job, Tim, and I know you love your job and I've loved my jobs, but sometimes we run across friends that hate their job. And yet the job gives them purpose. A hard question for our species is, what is it? We're going to have purpose like family, like love, like experience. We're going to have to get into that. Because we're not going to be at the top of the food chain in terms of labor and productivity. So whether you're a poet or an artist or a musician or a CEO, by the way, even the financial groups, I mean, what is it? How exactly are the financiers, the people who invest other people's money, going to beat the bots? By the way, I don't know. How are the startups going to beat the bots? Imagine what it means to be a startup when you are competing against computers that are actually running models to create machines. And then, by the way, they've got agents that are actually conducting business in, it won't be Bitcoin, call it Satoshis, or not even Satoshis, maybe some derivative, probably dollars actually, because I mean, I would do business in dollars and keep my Satoshis stacked. You get the idea. The point is, our purpose is going to be the key thing. And that, whether it's human creativity, whether it's Bitcoin, all of these things are right on the cusp. And if you go back and read the 20-year-old book, Kurzweil's right on pretty much everything he said in that book. And he's going to be right again. So this is a groundbreaking change that people are simply not ready for. I'm not ready for it. And I've been on an eye-opening mission. It's been really amazing. I thought Bitcoin and MicroStrategy were an interesting walk. The whole evolution of how the world is changing so rapidly in front of me. And I credit Raoul Pal with a lot of this, by the way. He's done extraordinary work on the exponential age. And I think he and his cadre, they're visionaries.
What advice are you giving to young people as far as should they go after something from an educational point of view?
Yeah, it's a good question.
That is kind of for now as a career.
It just changed.
And then do something
It just
else.
changed.
Yeah.
My advice just changed. Of course, I told you I have 1,000 former students. So one of the deals is if you've gone through my class, I don't care where you are in your career, you can always hit me up on LinkedIn and I'll do a Zoom with you or whatever and talk to you or give you any advice. So I get this frequently. And it just changed. I spent a lot of time talking about play to your strengths. I spent a lot of time talking about build up a capability inside a company or in doing what you want to do, figuring out what you contribute really well that creates value and all those things. And now I'm flummoxed. Why? Because I'm not sure that advice is going to matter much in 5 or 10 years. I think remember, guys like me, women like me, grew up telling people, there's some small cadre that say, follow your passion. And there's a larger group, do what you do really well and create value and contribute. I'm in the second bucket. I got to tell you, I think the second bucket's wrong. I actually think in this new world where a computer will be able to do pretty much anything my son wants to do better than he can do it for, call it 90 of his 130 years, I think he ought to do what he gives him enjoyment and purpose. That's a different message. And my first class teaching was in 1999. That was a long time ago. What is that? That's 1999. That's a long time ago.
Yeah, 25 years.
It's 25 years. That was certainly not the message then. And as I've been on hiatus from NYU for 2 or 3 years, I think I'm going to do a course in the spring. So I'm going to have a different message. So that has been my message for 22 of the 25 years I've been affiliated with the university. And that message is changing in the spring. Now, I'm an accelerationist. I'm an optimist. I think this is good. I think I think our species has a bright future, but we got some things to navigate. And by the way, they don't include Bitcoin and MicroStrategy too. These are bigger questions. Although I still like the stock.
What's been your favorite experience teaching?
My favorite experience teaching. First of all, I should tell you I teach Socratically. So think of it as paper chase for business school students. And for the 99% of the people who watch your podcasts that are under age 50, Paper Chase was a show in the 70s about law school. And anyway, look it up on Google. And fundamentally, it is a constant learning exercise because you're not really lecturing. You've got a dialogue going on with the students, and they surprise me. I mean, I've had 25 or 22, whatever it is, final exams, and some of the exams are crazy. I mean, I remember when Yahoo was cool. I remember when Yahoo was on the final exam and everyone thought Yahoo was the greatest thing in the sliced bread and it would take over the world. I remember when everyone thought the New York Times was one of the greatest business models in the world. I remember when I already mentioned earlier when Google was at $85 and everyone thought it was a short. I mean, when you see and you teach a rotating group of case studies for that long that all are technology, media, and entertainment, what you come to understand is that it's very difficult for these businesses to sustain a significant moat for a substantial period of time. And, we begin to see hints of that. I'll give you just one example. One of the big stocks I don't own, by the way, and this is not financial advice, of course, but it's Google. Why? Because I'm finding I'm using ChatGPT or any of the other derivatives here more than I ever have. And that tells me something. It tells me that, you know what? They've moved from playing offense to playing defense. Now, even their new product, which I think is really interesting, is powerful, but they're still playing defense with it. The product innovation there is trying to overcome the pressure that Google search is going to come under. So I don't like that stock.
What are your thoughts on X, formerly known as Twitter, and where they're going versus everything else, versus the traditional media? And the other thought that comes to my mind is Elon or X announcing within the last week or so that they're kind of going to be amping up their video capabilities to maybe compete more so with YouTube, or at a minimum give creators, that platform.
Yeah. So one of the things I neglected to mention is that I've overseen newspapers and TV news and lots of media companies over the years, cable and others, and news magazines and business news magazines. So what I'm about to say is heresy. I should be burned to the stake for this. I think X, which I don't like the name, but I do like the product, is profoundly important and disruptive and exciting and vibrant. And I myself am not troubled so much about its excesses. I think it is a beacon of chaos in the middle of an increasingly staid and not very interesting media landscape. And that beacon is nonetheless a beacon. And that to me is really interesting. And I think it's powerful. And I really love what it's doing. And I use it all the time. I'm completely addicted to it. I love it. And by the way, I'm no longer on Instagram. I thought it was dull. I gave up Facebook. And by the way, I like those stocks, by that stock rather. So it's not that. I think it's a phenomenal company. Meta is an amazing company. I think it's incredible. And I happen to know some people there, and they're some of the most amazing and smart and fabulous people I know. And I like the stock. I just don't actually use the product. But yeah, X has got it going. What do I think about, by the way, YouTube, incredibly powerful product. I acknowledge. Yeah, the more the merrier. Come on in. Mainstream media, more complicated, very complicated for me to get. I do consume it, but maybe I've been brainwashed. I have difficulty trusting it. Go ahead.
What?
As I said, burned to the stake. I don't know. I guess there's TradFi and TradMed. I guess TradMed, is that like traditional media? TradMed?
TradMed.
That sounds like a doctor. TradMed.
We probably just coined a phrase. That's good.
Oh, I should coin another one. So, all right.
So this is going to be an ignorant statement because I'm not.
Well, there's no such thing as an ignorant statement when you're asking questions.
Okay.
Let it rip.
LinkedIn. Are they just kind of holding on because it's the only professional way to interact with someone on the internet?
Well, LinkedIn, now I use it a lot. And I'll tell you why I like LinkedIn, because I have exactly 3 followers on X. So at least I have more followers on LinkedIn. So I'm excited about my followers on LinkedIn. When you have 3 followers on X.
Yeah.
There you go. It's for all those. It's for late Gen X and boomers who don't have any followers on X. I'm convinced.
I'm trying to remember, and maybe you can walk us through some of what we were talking about earlier when we first sat down about MicroStrategy and blackout periods and this and that.
Oh.
And even all the levers, all of the opportunities, even just listening to some of the conversations on different live streams today. It's like, well,
I follow a lot of that stuff, as you know, because I like the stock.
Yeah.
And more recently, it was very interesting because there was a lot of, from my perspective, having run 2 public companies, a lot of confusion on an at-the-money issuance of shares and blackout periods related to earnings and other things. And the point that we were talking about, I'll just make it now, is at some point in recent weeks, Saylor and his team had come up with the 21 plus 21 plan. And it may have preceded the blackout period for earnings because he was approaching the earnings call, or it may have come after it and the blackout period for the earnings call preceded. It doesn't matter which. But at some point, they were in possession of non-public information or they were in the blackout period. And they did not want to be doing an at-the-money issuance of any sort where they were in a position to have more information that was non-public than the people who were buying their shares. So fundamentally, they wouldn't have been trading, in my opinion, during that period of time. And I was merely making the observation that it's not surprising to me that the big run-ups in MicroStrategy tend to be during those pre-earnings periods where there is not an at-the-money sell going on. And then there's typically a couple of days of cleanse after the earnings period, and we just went through them, and it probably would have been cleansed by Monday. And that's typically where you would have expected somebody that's got a $21 billion ATM out there is going to be selling shares. And particularly immediately before the election, you'd want to be buying as much Bitcoin as possible because you got a bimodal outcome of the election. And so I wouldn't be surprised and was not surprised to see it was a little bit frothier today, but even today, MicroStrategy was up a little bit and then it kind of sold off a little bit in the day. And it looked to me like they're selling on a trade-weighted average price basis at a pretty good clip to raise cash for Bitcoin purchases. So what I was trying to say was a lot of people don't realize that around the earnings period, there's a blackout period, or if they're in possession of non-public information, CEOs or management teams won't do the at-the-money trade. And during that period of time, you have periods where you think it's Saylor selling. It's probably not.
What's your guess as to when MicroStrategy is going to achieve what Michael Saylor has publicly said, which is from about $50 billion market cap to $1 trillion market cap? What's the journey there?
Well, I actually don't know that he'll get to $1 trillion market cap. But as I said, I like the stock, and I think about my MicroStrategy position. And by the way, I should also tell you, I did adjust it in the last couple of days. On Friday, it was a little choppy. And so on Monday, what I did was I usually had long-term call options, which were expiring in December 25 and January 26. And I actually swapped those back into the stock. as well as then bought rolling calls that are short term and slightly out of the money. And the reason I did that, which is essentially de-risking the portfolio in some respects, and the reason I did that is because I think we'll be in for some chop for a while, but there's always a chance we're going to have a parabolic move. At any moment it could happen. So I always want to be long with an asymmetrical pop. And that's the way I think about the stock. So that's almost a fractal of how I think about MicroStrategy, which is, for me, MicroStrategy is a way to have 0 as the downside and infinity on the upside. And if you take the average of 0 plus infinity, that's pretty good money.
Anything else that you want to cover while we're spending some time together?
So why do you do this?
It happened by accident.
Yeah, but that doesn't tell me why you do it. I mean, I go out and trip. Doesn't mean I trip a bunch of times. That would be a choice.
So someone that we both know of and have met by the name of Grain of Salt, he introduced me to Bitcoin in January of 2021.
Was it a revelation for you?
It was a revelation. It was a journey. He was very helpful and still is very helpful in that journey. And earlier this year, he was texting me, hey, come out to the MicroStrategy conference in Las Vegas, MicroStrategy World. And I was like, I'm not going to go. So he texted me, said, be at this hotel on this day at this time. He didn't. That's all he said. And so I sent him back a screenshot of a flight that I booked. I'm like, whatever, this would be fun. So I go out and we rent some cars and drive them around, had some fun. I regret that I did not actually go to the conference because it would have been an amazing opportunity. This is how early it was for me, even just earlier this year.
Was it Vegas? Where was it?
Vegas.
Vegas.
Yeah. So
you just sat out in the blackjack table, or what'd you do?
I flew in, we drove some cars around, we had dinner, and I flew out the next morning.
Okay. Well, next time you go to Vegas, I'm taking you because you'll have a better experience.
Well, I'm looking forward to it.
But not better than Grain of Salt. Well, we got to get Grain of Salt to go, and then we go. But we're going to slightly adjust. We're going to slightly curate your experience.
Okay. That sounds amazing.
Blackjack's in your future.
So the embarrassing part is we were hanging out, and I said, hey, just so that I'm in the trade on the flight here, I bought 1 share of MicroStrategy stock.
Oh my God. Well, you did play blackjack.
So, and then after that, I was like, oh, I really, the journey for me was Bitcoin doesn't seem to be giving me the volatility it gave me a couple years ago.
Right.
And that was really
Are you a volatility junkie?
I just enjoy something that's volatile enough to have the upside to have
now this is really
return.
Important. If you're a volatility junkie, do you feel it in the prefrontal cortex? Is it an intellectual exercise, or are you really getting in the amygdala right down deep? Where is it?
Yeah, probably the latter.
The latter? Yeah.
Yeah.
And how do you rationalize your addiction to volatility in stocks when what you're really doing is feeling them in your gut? I mean, do you cling to the notion that it's really an intellectual exercise and that you're inherently right? Or do you secretly acknowledge, you know what? I'm not sure, but sure feels good.
Both, but mostly the first one, because similar to being at the Bitcoin 2021 conference and seeing Michael Saylor and seeing Jack Dorsey when he was still the CEO of Twitter on stage, and Jack saying, Bitcoin is the most important thing that I can do with the rest of my life. And if I need to resign from Twitter and or block Cash App to do it, I will.
Don't you think resigning from Twitter was the most important thing he could do with the rest of his life?
I mean, it was just very impactful to me. And
it's impactful to the whole world.
Yeah. So, that's
So let me ask you something. Do you find that your fascination with volatility is correlated with wearing a suit?
I feel more productive when I wear a suit.
Why is that?
I don't know. I think it's just, right? I'm in the uniform. I went to 14 years of Catholic school. So this is pretty much what I wore, or a sweater. So it's I'm in business mode.
Yeah, but you're wearing a Netherlands orange tie.
Well,
I think it's the sign of Protestantism, isn't it?
It's just, it's just it's the Bitcoin energy.
I love the Bitcoin energy. So, suit for the win. It's a nice suit, by the way. So, even though you're actually a swashbuckling gut-driven, intellectually rationalizing MicroStrategy buyer and holder? Do you trade too? Do you like two options?
A little bit, but not too much. I just am still early in that journey. And so
it's like 4 years on. You said 2021, right?
Well, yeah, journey as far as options are concerned.
Oh, why?
That's just where I am.
Oh, is it going to be a long journey? I mean, is this like things that is this a tortuous path or what is this?
No, just, I like to have a position in something because that's the only way I'm going to watch it. And then once everything clicks, it's kind of like an incremental or all at once, like, okay, well, we just need to be long, right?
Well, buy and hold has its advantages. Yeah. There's no question.
Yeah. But no, several, friends and mentors, or definitely have me on the right path. So that's good.
That's great. Well, I have to say I've enjoyed chatting with you.
Likewise. Thank you for the time. And
it's been a pleasure. Thanks for inviting me.
Yeah. We'll have to do it again whenever you're in town.
Oh my God. You've got better people to interview, but thank you.
Thank you.
Nice to see you.
Good to see you.